Hey traders, Raghee here. Welcome to Friday's edition of Charts and Coffee. Great to see everyone. Non-farm payroll Friday. You know, I was just on Benzinga before CNC, and we were looking at the reaction to non-farm. Probably one of the quietest initial reactions that I've seen in a while. A number came out and the market just paused. There was just nothing going on. And the guys asked, well, what do you see? And I said, we want to always look at what the lead up, what that ramp up or a ramp down in this case, what that lead up was into a hot zone, especially one as impactful as the big monthly jobs number. And what I think is really interesting, and I'm looking at a 5-minute chart of the S&P. Take a look. This is taking us back to, as you can see here, the 31st, end of month shenanigans. Look how long we have just remained below that 200 propulsion. That's the exponential, right? The 200 exponential. Look how long we've remained above that. So for non-farm to be meaningful in terms of that reaction, breaking above that level would have been key, and we just didn't. In fact, non-farm just confirms what we've been seeing in a while. And it's, if we jump on over to do the same thing on the NAS, which I'm far more bearish in than the S&P, very similar type movement. And if we head on over to the Dow, and this sort of falls in line with the free video that I shared last night, which is now is the time to start looking for shorts. And frankly, I'm not sure that it's not a little late, although I think we'll probably chop around. But that gear that I want to shift to, which is we've got end of quarter out of the way, we've got the end of month out of the way. We know the Fed is going to be hiking rates in May. Whether it's a quarter point or a half point remains to be seen. We know that, I was telling the guys on Benzinga, I didn't participate to the upside on the rip higher in the indices because my view of the market was that we had a trend and it was down. Once the downtrend was broken, it was chop. And in that environment, specifically the indices were not the most tradable things in the world. And I was telling the guys, and I think we've talked about it quite a few times here as well. I don't really particularly love the daily time frame of the S&P or the SPY. Right, the ETF. I don't particularly love the look of this chart. Got some volume ledges, but what the heck am I dealing with? If I'm looking for an edge, if I'm looking for somewhere where I have a tactical advantage, I will say looking for an overbought resistance is really the main thing here. But when I look at a piece of the S&P, I want to buy a dip in healthcare. So when folks say, well, S&P is not in an uptrend, I agree. It's not in a downtrend either, though. So now we ask ourselves, what piece of the S&P has clarity? It could be downside clarity. It could be upside clarity. Upside clarity is healthcare. All right, so that's something that it's very important, I believe, in this environment. When I look at the chop and we start to get more granular about in choppy markets, we always should be stock pickers and sector pickers, but it's really, really important in the lighting is once again changing in this office. Here we go. It's really, really important to be cognizant of not the markets, right? Corners of the market, certain sectors within equities are bullish. Certain sectors and stocks within equities are bearish. Same thing goes with commodities, which I dove into particularly deeply in our macro market deep dive video, which I know many of you have or will be getting. So heads up for that if you haven't checked it out yet. So that's why I'm looking at what's going on right now. And as always, this show is about your questions. So let's jump on in. All right. So first up, Peter asks, am I still short the euro Well, let's go take a look. So I've got two setups on the euro that I'm in, the 6E and the FXE. So the simpler futures folks are likely short the 6E or the micro M6E, or in the mastery, in the sector sequence mastery, we're long puts in FXE. So am I still in it? Absolutely. Absolutely. I actually added, however, to our list of ways to play currencies right now. Dollar buys make a lot of sense at the moment, as do puts in FXB. So put those two on your radar. So yes, we are still in that trade, which is finally, after taking kind of the scenic route, which is why we have paper cut stops, which is why we put in a certain amount of tolerance for a market moving against us built into our trading plan. When you get into a trade with me, the stop based on a fixed bet approach is already known. You already know what your budget is, and you already know what percentage of that budget you're going to risk. So stops are set. Literally, there's a formulaic approach to it. So you know what your risk is based on what you paid for the option and how many options you bought. And then the target goes out with the alert. So we already knew, okay, there's a certain amount of flexibility, some elasticity built into knowing that trades will temporarily often move against us. But that doesn't actually break the point of validity for the trade or the trend. So yeah, I mean, it took the scenic route. It was irritating for maybe a session. The strength, though, is what allowed us to have the ability to buy the puts on a blue light special. People will scramble into the puts now because the markets are heading lower. An exhaustion trader, a dip buyer, and a rip seller. We got to start thinking about sell the rip and be as fluent in that as buy the dip. Both are trending strategies. So we need that rip to buy those puts into, and put FXB on that list for sure as well. We'll be probably, it's pretty liquid. We should be able to get some opportunities there. Mike asks, is 2640 a good, speaking of currency, how you doing, Mike? Is 2640 a good target in the UUP? All right, so let's take a look. We've got some volume action right in here. So slight volume ledge right in there. Got a pretty good gap. You know, I don't have 2640, 2645. I'm fine with that. We'll be stepping out in front of the size that's likely waiting at 2650, major psych level. Yeah, I don't have a problem with that at all. There will possibly be, there's a gap close right here. Okay, so we'll paint this another color. We'll go with red. That 2640, 2630 and change, the close on March 25 was actually 2641. So that level right there could very well be one that we want to keep an eye on for the gap close. So let's just put that at 2641. And if you want to put an alert about a nickel ahead of that, as I teach you all to do in the mastery, go for it. So yeah, I'd say somewhere between 40 and, if you're going to go with 40, yeah, it's probably a good spot, and everyone can see why Mike was looking at that. Well done. Well done. Really nice. Hey there, Chris. I'm new to your mastery group. Welcome. Very cool. We have a lot of folks that have just joined. The community just took a big growth jump, and I love the energy in the room. It's been fantastic. Can I explain how to know when to stay in a trade? Keep the faith when it has a slight downturn. You see gains and then are afraid to lose them. I hear you. I totally get it, Chris. So all I can tell you is the process that I went through, and I think every psychology book is really distilled into what I call the 3 C's. Confirmation, and I love alliteration, so warning, comprehension. Got to understand the process. So a lot of times the uncertainty around being in a trade simply comes from this side of the mic. It's on me. That first C is me explaining with as much transparency as possible why we're in the trade and why we're looking at a particular direction, target, entry, exit. So that's the comprehension. Confirmation. Okay, I've said what I've said. Now, are you seeing success? Are you seeing it work? Are you seeing it play out as I've described? So we're gonna go through this loop of trying to understand something and seeing it work in the market. Trying to learn something new, seeing it work in the market. We loop there. That's the process of learning. Comprehension, confirmation. Learning something, testing it. When we go through that loop enough, and we all go through that loop, you can call it whatever you'd like, but we go through that loop, a very natural, we can't say be confident. I can't tell you, Chris, well, just be confident. We can't, right? It's like telling someone to go out there and just be authentic, right? Or whatever. Be happy. What's the process underneath that? So I'll tell you, Chris, it's really where does the confidence come from? I don't know how long it takes. Everyone has a different comprehension, confirmation loop. And some people need to go through that loop 3 times and they're good to go. Other people need to go through it 33 times. What I have found, though, the easiest determining factor of how many loops you need to go through is how new are you to the way that I do things? And what was your previous experience in the market? Because if it was negative, wow, that's a lot of scar tissue that comprehension and confirmation has to go through. So I think what it is just, what you can do, Chris, also, because you can do it on TradingView. Go back in time. Go look at my older trades. Go back to the beginning of this year and just replay candle by candle by candle my older trades. Paper trading is not something I'm a fan of, but using TradingView or the look back feature in a lot of platforms to almost, I'm going to totally date myself, like a VCR back in the day, a DVR now. Imagine just using that to go through the trades that I've listed and watch it candle by candle and try to think about how would I be feeling when that market moves down and Raghee's telling me to buy? Because I think most traders are buying when the market's moving higher. They're shorting when the markets are moving lower. That's probably the first thing that a lot of folks need to calibrate to. So I think you need to go through that cycle, Chris, and then then I'll do my job, which is do the best I can to give you the tools and the transparency to get you through that comprehension, confirmation process. And then, maybe there's a 4th C now that we have this fantastic community at the Sector Secrets Room, the community, confirmation, confidence and community. When you have other traders who've been where you've been and they're new to this and they've gone through some of the same, synapses firing and discomfort and confusion, you've got a group of people saying, gang, how did you deal with this? When Rog's saying, this is a blue light special and I'm not used to buying on a dip or selling on a rip. How did you all get used to it? Ask the community, Chris. We've got hundreds and hundreds of members who have been with me for the better part of a year or more who'll say, yeah, I had to go through that too. And that's where maybe there's a 4th C now, and it's fantastic. So you have your comprehension, and it's so great that it's a C, right? I got 4 C's now: comprehension, confirmation, confidence, community. And I think, you're going to be fine. You're going to be fine, because I'll tell you what, I was just on Benzinga telling the guys, there's so much about the markets I don't know. And I think there's 2 things that a lot of traders would really be better off saying, which is, I don't know, and I don't have to be in the market right now. You do that, that's a lot of freedom to, go through that learning curve too. So great question, Chris, and I appreciate that. Hey there, John. I love the analysis in the gold room. Thoughts on GC for May long calls. John, I'll tell you what, I want to get long gold. I feel as if, I sort of missed just a wonderful opportunity on this wick, because in the futures room and in the Sector Secrets Mastery, we have been talking about 1904, 1902, and 1900. Look at those Darvis levels. They're laughing at me. And look, all these years in, 30 plus, and I still feel that way when I see that there is a pitch that was right in my zone and I did not swing at it. Luckily, we seem to be gravitating towards this volume ledge. We may one more time hit that 1900. I love the idea of a long, but I've got to take a whack at that pitch when it's in my zone. And I feel right now it's not. So over the weekend, I'm going to recalibrate and ask myself, maybe there is an opportunity to grab just an agro micro GC, maybe fewer GLD calls, something like that, and put in an agro position around 1928, 1925, somewhere in there, knowing that we are going to build a position that is larger if and when we get to that 1900 area again. So as far as May goes, I'm fine with May. I'll tell you, if you're going to go with calls and you believe that this is a market that is trending, which at the moment it's not, I want to be at least 45 days to expiration, 30 minimally, because we're not dealing with as strong a trend in as many markets, symbols, stocks, ETFs, our sectors, our indices, our commodities. I'll probably truncate my days to expiration to the shorter end. Last year before, 60, 90 days plus. I wanted all the time in the world so I could just ride those trends. In chop, I'll kind of cinch down to the lower end of that days to expiration. And gold might be a little bit less time, so May should be fine. But, try to make sure you're giving yourself at least 30 to 45 days, remembering that the time decay starts to accelerate inside of 21 to 14 days. So you really don't have the exact days to expiration to work with unless the momentum's moving in your favor, right? Because time decay is, we're buying depreciating assets, and that depreciation really kicks in inside 21 and kicks in again inside 14 days. So, think about that in terms of expiration, but I love the long side. Hey there, Diane. Is Starbucks still a good short? Of our brand new trades this week, Mo, DBA, Starbucks, FXE. This is the problem child, no doubt. It just needs to. I love when Neil, those of you that know Neil in the futures room, I love when Neil says, sit down. I kind of feel like that. Starbucks, come on, sit down. Pre-market, we're going to open up around 91.65. It's fine. This has definitely been flirting with the paper cut, right? We can see that paper cut coming. We're almost flinching, but we want to wait until it's truly no longer valid. I don't mind the little bit of a neutral market sentiment when we look at the trend that was, Diane, and we see that it's been down. It's been bearish for so long. So I'm okay hanging on with this. This is in no man's land. Hasn't hit my target, hasn't stopped me out. And I try to be as Vulcan-like, right? Try to be as unemotional about it, saying, Rag, you know what your target to the downside is. And I might move that a little bit higher, by the way. I'll send an alert out if and when we do. But I also know what the worst case scenario is, barring any kind of gap. I know what I risked the moment I bought the option. So I need to just be comfortable with that. So I'll tell you this. This is a great self-correcting measure. If you are in a trade and you're just constantly feeling uncomfortable, there's probably two culprits. One, you don't really understand why we're in it, which is why your question's so great. And two, you're over-positioned in terms of size, or you got in too aggressively. So think about those aspects too, but I'm still in it, and I'm going to play it out to whatever the conclusion is, Diane. Now, as far as DBA goes, DBA went higher, hit our target. We're at break-even stops now. How much higher could it go? We had a USDA report yesterday. The very end of the month, we did have some data, and beans went lower. And I was looking at SOYB for us, thinking, I'd love to start looking at a piece of this. But the problem is it's really illiquid, and I will not put us in illiquid names. And CORN did not pull back. So let's just get through that USDA reaction. Let's just get through that SOYB pullback. And I think DBA goes right back to its inflation trajectory higher. So how much higher? Let's just stick with, can we get through that first profit target, which again we hit? We get through that, and then we'll see what happens when we start to approach 2260, which is where we had that high on March 4. So I'll just look at what we have. I don't know what the market is going to do again, but I do know what my reaction is going to be if and when it gets to certain prices. So we'll just play this one out. I think the trend is clearly on our side. So let's let it work for us. Let's see, XLT and especially A. caught my eye. XLT, I'm not familiar with that, but A caught your eye. For a short the rip, maybe. How about we shorted it up against the 200? However, let me walk that back as well. We might actually have, and I'm not sure what you were looking at, Alan, but maybe it was one, two, three. One, two, three. Kind of, you can see here, made a slightly lower low. That does not invalidate the pattern right in there. There's your 1, 2, 3 breakout. So we might have a 1, 2, 3 bottoming. And the only reason that's even a consideration is because we have gone neutral on the underlying market trend down in here on the structure of the market. That's the only way a 1, 2, 3 reversal would be valid. So if we're going to get long on that, it's basically that as resistance and likely just step out in front of the 200 as an initial target, because this is still in chop. So there's a pretty good chance that this could be overbought between that and the Darvis. We could see a lot of potential for an overbought type reaction. Even though we have the 1, 2, 3, doesn't mean it's a precursor to an uptrend, but it is a precursor to the chop switching to maybe a little bit more near-term bullishness. So I'm not sure what you're looking at, the long or the short side, but that's the way I would look at that A. I don't have exposure to it. I'm not sure that I would. I don't prioritize the 1, 2, 3s, but they're there. For those of you who don't know what a 1, 2, 3 pattern is, it's an old Charles Dow pattern. It's an old pattern. It's the very first pattern that I ever learned. It's actually probably one of my favorites. It's, like I said, it's a Dow 1, 2, 3. And if you head on over to Countdown Trader, we have some breakdowns of it. In fact, the easiest way to find it is just Google Countdown Trader, all one word, and then 1, 2, 3. And you'll get, as you can see right here, some 3 of the blog posts that Trish has put together for us to explain what I do with that. So check those out. Let's see. Actually, is that one mine? No, that's not mine, but I'm sure it's a good article. I don't know who that is, but sweet. Dow 1, 2, 3, continuation and reversal, Countdown Trader. So check that out. If you don't know what that pattern is, one of my favorite patterns. It's really powerful. Can we take a look at Citizens Financial? David, I adore those guys at Benzinga. I did miss Spencer. Spencer and I always have a lot of fun talking about Bitcoin, but I always have a good conversation with them. They are a good bunch over there. CFG, Citizens, financials are a mess right now because, David, on one hand, we have a lot of chop on XLF. We have some chop on KRE. We're below the 200 here. We're not in a downtrend, although yesterday we had our very first red momentum, bearish trend. So we're below the 200. I'd probably want to short this. So I guess it depends. At this point, David, in the XLF, in financials, you could probably build as robust a bullish watch list as a bearish watch list. There's, when you crack open the financials, you crack open KRE and XLF, you'll probably be able to build bullish watch list, bearish watch list. So really at this point, it's which would you prefer to do? And I will tell you, moderately, I'd probably look at the bullish watch list. And I'd probably look for names that are more likely to continue higher than lower, as long as XLF is above the 200. And KRE kind of duking it out there. Really tricky part of the market to look at right now, David. But I think you're right. Focus on the stock. Focus on the boat and not the tide. And I think you'll be in really good shape. All right. XRT. Okay, Alan, no worries. XRT, we had a trade on that. Shout out to Mastery member Melissa. I love bragging on my community. She got a short in XRT back in here. Beautiful double red, rip into the wave. So we played that. One of our members said, "Hey, Rog, what do you think of that? I like it. We're all looking at the same tools. We've all got access to these indicators that I share in the room. So what do you think of that?" I said, "You know what, Melissa? I like it." It's really impressive. Melissa had been out. And if you're out there, Melissa, I'm just going to brag on you a minute. Melissa had been out of the room for a little while, and she was coming back, and she even admitted, hey, I'm just kind of getting back in the groove. That was her first call after getting back in the groove. And I said, my gosh, what a great setup. And she said, I just followed the tools. And it made me so happy. Number one, that she came back and was already trying to just get back on the bike, as they say. And two, that the tools allowed her to just not skip a beat. What's the structure of the market? What are our levels? All of our indicators are giving us automated analysis. And that was her first trade after taking some time off. And that was straight up her trade. I sent out the alert, but that was her trade. And that's the kind of thing we want to look for. Now, it's a little bit more overbought, oversold conversation, right, Alan? Here's some gorgeous Darvis levels for sure. But do I want to be short? I think yes. But is it the same structure as the trade we took back in February? No. So I don't have a problem with the short, but the structure has changed. The structure means the strategy has changed. And the strategy means the indicators that we're using have changed. So while the wave is the priority, wave 21 propulsion, Darvis in a trend, in chop, it's slow stow, it's Darvis, right? And volume ledges are great too. I have run way over. I completely lost track of time. Thank you as always for the questions, gang. I really appreciate it. We have our Ask Me Anything session starting at 3 p.m. So those of you that are members, come join me in the room and check out what we're doing, what kind of trades we're putting on. And then we have our weekly Ask Me Anything session. It's the last hour of the day. And all those questions that might have arose throughout the week, we try to tackle. Where are we on certain trades? What are you thinking for next week? How do you set up a particular secret squiggle? We love having that Ask Me Anything technical, whatever it is that you need to address, we do as best we can in that hour. All right, so that's a wrap. By the way, I'll see you all on Sunday as well. Those of you that may not be members, I'll see you all on Sunday for our weekly show, which has been just wonderfully attended. I know a lot of you get it. Sunday, that's separation season. Our week starts on Sunday. So I'll see you all 6 p.m. Eastern when the market's open on Sunday. All right. Okay, gang. Have a great one. Caffeinate and dominate. Non-farm payroll Friday, first day of the new month. And check out the free video from last night right here at the Simpler Trading YouTube channel for why I'm looking for shorts and specifically where I'm looking for them. Be good to each other, gang.